All right, guys, this is a currency convention 5. I am Train the Trader. We are ready to go, and things are going to be a little bit different, like I said, but I'm going to go ahead and run through these slides anyway, just as a little refresher for everybody. How y'all feeling tonight? All right, y'all, let's get it. Let's get it. What we're going to cover today: why you should be in the markets, liabilities versus assets. This is a topic that, I knew was going to stir up a little bit of conflict if we had a bigger crowd, but not so much here. Like I said, it's the core people, so we'll touch on this. But very important to understand the difference, for sure. How to pay yourself. That we all know, and this is probably the most important thing that I'm going to be talking about tonight, is to how to pay yourself correctly, to fuel your investment account. Where and how to get started, so the different apps we're going to use, and the information that we're looking for will come in our charts and company and financials at the end. So since this is going to be kind of different, this whole thing is going to be a Q&A pretty much. So as I'm going through these slides, it may be kind of quick for some of the core guys. But if you have any questions, if I say anything that sparks a question, like I said, don't hesitate to just unmute yourself and speak up, and we'll get it done. All right, let's get it. So why you should be investing. So this is often overlooked, but the stock market has risen 75% of all years in existence. 75%. So historically, the S&P 500 finishes up in roughly 3 out of 4 years. That's where you get that 75%. Even through wars, recessions, pandemics, political turmoil, and crashes. So, V, that plays right into the question that you just asked me. Has anything changed in my mentality? Have I bought anything? And there you go. Of course, I haven't changed anything, because what's there to change? We know this is a long-term thing. This is a marathon. This is not a sprint. So it's just about buying and buying and buying as much as you can, accumulating, and then we'll get to the other portion of this, compounding. This is where compounding takes effect, because as you're buying, y'all can read it here in the text, that investing $10,000 in the S&P 500 decades ago, historically, with dividends reinvested, grows to hundreds of thousands of dollars. Not just 100, not just thousands, but hundreds of thousands of dollars over a 40 to 50-year period. And that's due to compounding. And so the name of this game is to buy it once, accumulate, continue to buy, and as you continue to buy, and we know historically the market is up 75% of years in operation, that money is going to accrue in value. That's what the stock market is. That's how it works. That's how we benefit from it. Compounding is a big part of that. It's just allowing your money to work for you. There's an example I'm going to give about a company, SCHD. And for my vets, y'all already know where I'm going with this, but I have a cool example about that. And remember, time in the market beats skill in the market every time. So you want to put time on your side. That's why it's best to start as soon as possible. That's why it's best to get your kids set up in the stock market. So by the time they're our age, they are set and don't have anything to worry about. It is the best vehicle for creating wealth without needing a bachelor's degree or some expertise in skill or school. Everything that you get from the market is based off of what we're going to cover today. It's compounding, it's dividends, it's accruing in value over time, right? So remember, time in the market beats skill in the market every time. And what are dividends? Dividends are my favorite word in the stock market. Y'all know why. Dividends are 40% of total market returns for shareholders. So what is a dividend? It's a payment that a company makes to its shareholders as a reward for owning its stock. So that's why this is classified in the asset category, because when you purchase assets, they pay you back, right? So dividends are very, very important. And that company that I mentioned earlier, the SCHD, and somebody look this up so you can tell me if I'm lying. What is the price of SCHD right now? Nowhere. SCHD? Did I give you the wrong? Yeah. Should be like 54. Let me see. Unless I gave you the wrong ticker. Let me see. Because you know we're not telling no lies. I know, right? That's why I'm like, what? 28. If it's 28, hell yeah. Oh, I gave y'all the wrong one. It's it's JEPQ. It is JEPQ. JEPQ. JEPQ is 50. There you go, 58.93. I was like, okay, I gave you the wrong one. So if you were to purchase 125 shares of JEPQ, that would cost you, Brian, quick with the math. It's $7,000. $7,000. So remember, we had that, oh, too far, that $10,000 invested into the S&P. So this is less than that. $7,000 would buy you a share of JEPQ every month on its own with the dividends reinvested. So what is that? What am I saying? What I'm saying is a one-time purchase of $7,000 will buy you continuously every month one more share of JEPQ every month. So you're getting paid off of the dividend that you have for that share, and you're getting paid off of the dividends for the shares that you already own. This company pays a dividend every single month. So imagine if you had $20,000 and you could buy all those shares of JPQ, then those shares would be buying probably two of each other every month. See what I'm saying? And then you add the compounding effect, the dividends reinvested. Ladies and gentlemen, that is a cash cow asset. That's how you play the game. Now, not all companies offer dividends. Of course, there are different ones. This one just so happens to be one we love because we did our research on it, and it's backed by JP Morgan, which is a major bank and a major player in the world, not just in the U.S., so that's a good one to have. Yep. So Brian asked the question, how long ago did I start buying it and how much was it? And it was maybe last year, probably July, August. And it was probably, my cost average on it is 53.59. So one thing about JEPQ, it's not one that you're going to expect to see the price of that actual stock jump like you would see in Tesla or Meta and all that. This is just a safe haven, safe bet. It really doesn't move at all. It doesn't really lose value. It doesn't really go crazy. But the play on it is the dividends. It's just accumulation value. And that's just one way that you can do it. You know, you can have a whole dividend of 15 different stocks that pay dividends. It's absolutely possible. And then you have a separate account that's for your long-term companies that don't pay dividends or maybe for something else. How you structure it is completely up to you. That's the beauty of the market. You just have to know where to look so that you're making good decisions with your purchases. We're not looking for lightning in a bottle. That's what a lot of people like to hear the online stories of people just purchasing. Like GameStop was a really big opportunity for smart money to make a lot of money off of people who didn't know any better. So there's a lot of people that jumped in the market just off of the hype of GameStop that lost a lot of money, as y'all saw in the movie. So that I think there was a lady that lost like she was like, I'm gonna hold, and ended up holding, was in profit, and then by the time it all settled, was like down $40,000. You can imagine there's probably a million people just like her that made no money on that, and it's just because they didn't know what they were doing. They jumped in the water with sharks and thought they could swim. Doesn't work like that. All right, liabilities and assets. So very simply, the difference is money you pay out that does not come back is a liability. There is no gray area to either one of these. If you spend it and it doesn't bring money back into your pocket, it's a liability. And these things can be short term, like bills, rent, credit card payments. They could be long term things like loans. Yes, yes, yes. Mortgages is on here because mortgage is a liability, ladies and gentlemen. There is no money returned in a mortgage payment. This one is, I'd hate to say this, but the American dream, as most of the vets know, was an absolute lie. What was the American dream? The American dream was go to school, get a great education, get a nice job, hopefully find a partner to take on bills, and then you take on the biggest, most expensive debt of your life by purchasing a house. And you get nothing from that purchase. Now, when it comes to assets, things that you buy that bring money in, we already mentioned some, stock market, that pay out dividends. These things can be tangible things, cash, real estate, equipment. If you own equipment and rent it out, you can do that. Intangible things such as stocks, bonds, patents, and trademarks. So these are often things like you can create that then return money. And just like digital marketing sort of, or digital products, excuse me, you create it one time or you purchase it one time and it pays you month after month after month. You don't have to continue to buy it every month. You buy it one time and you start making money off of it. That's the difference. Now, let's move on. Let's move on. All right. Always, 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 always. V, I am selecting you to speak on this. I want you to tell everyone how paying yourself first changed your situation.
Oh man, shoot. Well, first and foremost, I didn't like that idea because we all came into not having any money, so paying yourself didn't make any sense to me because I didn't understand the concept.
Right.
But once you understand it, it's very, very important. This is one way that you allow yourself to be disciplined, and paying yourself is important because it allows you to consistently contribute to the market. It's crucial because there's no sense of blowing your whole check on Jordans that does not bring you return.
Absolutely.
It's the status symbol. We don't go for status, we go for the future results. So it's very important for me to actually consistently set up automatic withdrawal when your paycheck hits, so that way you're not having to do it. It comes automatically directly to your account, and it goes from your account to Roth IRA or your brokerage account. It's very, very important. It saved me because I don't have to look and worry about what's my future looking like. I'm just consistently in this marathon race.
There you go.
That's all. It's consistent, time after time. Be there, show up. It's very important. Like AJ said, be in the market.
I I asked V that because V can attest to this. When I first got into the market, I tried to put V on and explain to V what I was doing, what I was looking at, and how long would you say V it took before you were like, damn, like he really might be on to something?
Honestly, I would say 3 to 6 months.
3 to 6 months I worked on my brother trying to get him to listen. 3 to 6 months. So I look around, and thank you, V. I appreciate you speaking, bro. Um, I look around, and as we get the cancels, I already understand how hard it is to get people to even want to listen to this. It's not sexy. It's not fun. The information can be boring, but depending on who presents it to you, it can, and it is a different language in a lot of ways. There's a lot of terminology that you have to understand before you can really grasp how to do well in the market. I've just decided when I was pitching it to V that I was going to go down that rabbit hole because I had nothing else going for me. I had no future. I had no 401k. I had really no money saved. And based on paying myself 10% of everything that I brought in. I mean, every $1,000 you bring in, you take 100 of it and put it straight into your investment account and make that a priority, more important than paying your mortgage, more important than paying your rent if you're renting, more important than the water bill, the cell phone bill, the cable bill, money you owe Jack, Jane, Jill, whoever. Make this priority number one and watch what happens to your investment account and to your attitude towards the stock market in 6 to 8 months. 6 to 8 months. My attestment to this, making scraping by on what I could afford to put away every 10%. I did this religiously for, and I still do it, but I did this for at least a year, and then we got to year two. And my claim to fame is taking $500 and growing that to $35,000 in 3 years. And that's just off of my investments and me putting 10% away into the account religiously. It is super empowering. And now I know for sure if I was to not put another dime into my account from this point forward, as we just saw in that example, $10,000 can turn into how much over a 40 or 50-year period? Hundreds of thousands of dollars. So I have 30K. So if I never touched it and I allowed my dividends just to be reinvested and they sat there until I was 80, I'd have over $300,000. There's my retirement, right? And it's guaranteed. I created it. Nobody can take it from me. If I have children, I can inherit it down to my children. And it even goes bigger than this. If you have not set up a trust for your family, you need to do so immediately. Immediately. Set up a trust so that way, life insurance, of course, is important as well. But that way, these things are protected. They are protected so that if you're no longer here, then you don't have to worry about Uncle Sam digging his dirty hands into what you're owing or what you're leaving for your kids or your family. It's very important. And people in our community don't pay enough attention to trust. I don't know if y'all have a trust, but yeah, super, super, super important. My parents don't have a trust. I tried to put my parents on getting a trust at least a year ago, and my dad was like, "Yeah, we'll look into it." And it's if it's not important, it won't get done. But I guarantee you this: when that time comes, there's going to be some decisions that now I have to make if I want to keep like their house. I've got to go deal with lawyers and whatever payment or fee that you have to pay for processing and getting property that's already in your family that your family has maybe been paying a mortgage on. Hold on. It's a lot of mess. But that just goes to show you that even me coming into this market, I had no formal education. I had no understanding of the power of the market. and how it can be used and structured to actually help not only myself, but my family and my lineage. So this is why big money is so involved in the market. This is why all these major companies are in the market, and they use the market to hedge and make more money, to make bigger things, continue to grow, let value accrue, because they're purchasing and they're active in one of the number one, probably the number one asset growing machine in the world, the stock market. Next would probably be major corporation ownership. And we all know that that access is not for everybody. We can't just walk in somewhere. You have to be educated. You have to have references. You got to have experience. You got to have a lot. And then you got to have a lot of money if you're going to actually start and run a major corporation. Okay? So 10%. I spent the most on this because this is the most important thing I'm going to talk about, is incorporating this. And this is how you do it. You just allow compounding to take effect. 10% of all your income. If it's $10, put $1 away. If it's 100, put 10 away. If it's 10,000, put 1,000 away. Just make it easy. You will not miss it. I promise you won't miss 10%. You'll forget you're doing it after a while, and then you'll look at your account in 6 months and be like, damn. Watch. And for those of y'all that have done it, you know I ain't lying. Now, this is kind of disappointing. So this was something that I was going to do for the crowd, and I'm going to do this for the guys online. But everybody online, I believe, has Charles Schwab or Thinkorswim. If you don't and you're on the live online, tap in and let me know. If not, because I was going to have a live competition and allow people to download the Charles Schwab app and Thinkorswim, and the first person to do that, I was going to give a prize to tonight. So between the two of you, yeah, there's a competition that y'all can have, and online, y'all speak up and y'all let me know. Tap in, because I know. Here, let me go to my people right quick. Let me see who's in here. Erica, you don't have it. And that's it, because everybody else has it. So, B, you can start a timer if you want to start them. You can do either one, but you're already on your phone, so yeah, do it on the mobile. But the app icon looks exactly like that, the Charles Schwab one. So, whoever gets it done first. Have y'all already started? Y'all cheating. So whoever finishes first, $10, and you're gonna get a signed copy of my book, Mastering Candlestick Patterns. This book I created specifically for beginners. This is a great book when you're learning candlestick patterns. Every picture in this book I went and found in the market, and they're all recent. I doctored them up. I put points where you need to focus your attention. This book is actually a really, really good book. Top 25 candlestick patterns. So this is $30 of value. And if you haven't picked up this book, you can find it on Amazon. This is my only plug of the night. What y'all doing online, man? Y'all too damn quiet. Fuck going on? Everybody muted. Okay. So y'all, I guarantee you this, and I'm on Discord live trading Monday through Friday from 9 a.m. to 11 a.m. Because normally we're done making our money by about 10:30, 11. If I'm lying, one of the vets say I'm lying. Call me out. But that is the best time to tap in with us. It's on the Discord, on those lives, because you can ask questions, even if you're working and you just have it in your ear, as opposed to watching videos and scanning and other things. If you're not doing anything, tap into those lives, because there's a lot of value that's in those lives when the market is actually moving and you see how we're trying to take advantage and capitalize and execute our trades. Super important. So we go ahead, V. That's what I love about our lives, because a lot of time on the lives, we're sitting on our hands. We're waiting. We're waiting for our plays to, or for our entries, or for our plays to play out. So there's a lot of downtime. And V's right. We have a lot of deep discussions about economics, about the world, about everything. So there's a lot of time to get your questions answered live while the market is actually moving. That's the biggest advantage. All right, guys. So we only got a couple more slides left, and then we're gonna get into charts and data and kind of our Q&A. So this is really where it's at. This is really, look, if we go through, these are examples of a chart, right? So we got 3 different examples of what it looks like when you log into Think or Swim. Now, when you log into Think or Swim on the computer, it will look slightly different than when you log into Think or Swim on your phone. Just understand that. The apps on the phone and the computer, they all look just like this. That is the right icon. So this is kind of what it's set up. And another reason that I wanted you guys to download these 2 specifically is because now when you ask me a question about charts, or you ask me a question about the program itself, how to do something, I am a master at Thinkorswim and Schwab. So I can almost answer any question that you guys could possibly come up with. So just so you know that, right? So what better way than to get instruction and be on the same system as your guide or your mentor, so that there's no friction, no confusion in the middle. Somebody running water. Zay, if you washing dishes during the damn meeting? Boom. All right, here we go. Paying attention to company news and financials. That's what you want to do. So these 5 sites are really all you need. So guys, screenshot this, screenshot this. Pay attention to company news, not the mainstream media. Stay away from Fox, stay away from CNBC, sometimes stay away from MSN, ABC, CBS. Stay away from those news outlets when it comes to doing research on companies. Oftentimes, the mainstream media is either late or they're fear-mongering and trying to get the masses to think a certain way so that they can then manipulate the market against them. We've seen this happen several times. Okay? Guys, so I'm not lying. Anybody who's been on the live, how many times have we been trading and we see a major move in the market, and then a couple hours later, some news hits the stand or it hits TV and we see it? Y'all tap in. How many times has that happened? Dub said last week. All the time, right? All the time. Especially with Trump in office. And I mean, guys, the market now, we're talking a lot now about day trading, and this applies more to day trading as far as like everyday news. But it's you just have to be careful. You have to be careful what you're paying attention to. Often you can be distracted by the noise of the news if you're too in tune to somebody's opinion. Like maybe it's somebody that you follow that you really respect their opinion. You don't know who they're partnered with. You do not know who's come to them and talked to them and told them to say what, right? So unless you have a personal relationship with that person, you got to take whatever they say with a grain of salt. And that's where understanding how to interpret financial language and how to interpret charts and what the candles are telling you can steer you away from this. And Brian brought up a great example. I'll use my dad. My dad finds himself more curious and more tuned into the market now that I'm doing what I'm doing. But now and then he'll ask me questions like, what do you think about this? Just the other day, he asked me if any of my news sources were having me lean towards a certain, or any of my news sources were revealing if Trump was leaning towards a certain decision way on the tariffs. Okay? And I've told my parents, especially my dad, multiple times, I don't give a flying about the news. Okay? I don't watch it. I don't care because it's too late anyway. Every decision that I make on day trading is based on the charts. The charts always reveal what happens first. And why is that? Let's break that down. Why would that be the case? That's the case because who runs the market and who really moves the market's price? It's major money, big time money. And it's not politicians. It's not the president. It's who the president may be talking to. It's who those big corporations may be in business with. So they have first insight, right? And they know if bad news is coming or good news is coming, exactly what they're going to do. And they're going to know way before the news has time to read it, learn about it, and print it and send it out to everybody. Does that make sense? So that's why we pay, bless you. That's why we pay attention to the charts. The charts give you all the information that you need to know, along with these 5 sites that we have right here. Y'all, again, screenshot this because these are the only 5 that you really need when you're getting started. You can find all the information that you need on every company that you're interested in, and especially every company that's worth a damn on these 5 sites. Okay, stay away from mainstream news. Everybody cool? How we feeling? Everybody still awake? Go ahead. What's that?
Is this a chart?
Yeah, it's a daily. That's got to be Rock asking me that. Rock, you got Thinkorswim.
I was just making sure.
Is it big enough for y'all to see this up here?
Yeah.
Okay. Yeah. Is that what it's like? Okay, Ethan. First question, what is it? If that was Dub, was that Dub that asked it?
Yeah. I said, can you explain what SPY is?
SPY itself is an ETF. It is a tracker of it's a, how do you call it? I don't know if derivative is the right word, but it's a tracker of the S&P 500. It's an ETF. So the top 500 companies listed in the market or within the S&P 500, SPY makes up like a fractional ETF of what the actual price is. Is that making sense? But it tracks the same thing. So if you were to go to like one of those five sites that I mentioned and had up earlier, like Yahoo Finance or Google Finance, you can actually type in SPY and it will show you the companies that it's tracking. So it takes the overall value of those 500 companies and spits out a number, and that's what it is. Yes, sir. P, you had a question?
Yeah.
Hold on, V. Yeah, I said Paulina. Paulina has a question. So she says, what is this? Because as she's looking at this is her first time seeing this. This all looks like gibberish. And that's exactly what I said the first time I saw it. So that's a normal thing. These are candles. So let me remove this real quick. The stock market or the SPY, as you see on this chart, this SPY is represented at the price of $691 right now. So every day, $691. That's the level we was making money off of this past week. So it is broken down by every day price movement. So here's what I mean by this. Right here. Now, this is why I asked if y'all could see this top bar right here. Okay. So I want y'all to pay attention to these numbers right up here. Can y'all see that? I know it's kind of small for y'all, but if you look here, we can see that the O stands for the open of that candle or of this day. That was the opening price. So the opening price was $693.66. It got as high as, which is the H, $694.25. The low of that candle, the lowest price of the day, was $690.1. And then it finished the day and closed the C at $691.66. So each day, these numbers are different, right? So this is based off of the price action of that day. So this is not the only way that you can read charts. Candlesticks just so happen to be the easiest way for us to see price action for some reason. They have bar charts, they have like graph charts. You can do them by hand if you want to. I use technology. So absolutely. And it's like that for most people. Say that again? Yeah. Because I'm on the candle right now, as you see my hand, and then on the top bar it gives you your number breakdown. So if you're watching, watch those numbers at the top. Y'all see that? Yeah, so that's how you track. So every day as day traders, we're looking at this information very closely on what the price is doing that day because that's how we make money. And as a investor, because there is a huge difference between a trader and an investor, ladies and gentlemen, a huge difference. Investors buy and don't sell. They just buy, hold, accrue value over time. That's what all of us should be doing. It's the easiest thing to do. It's the smartest thing to do. Trading is for dogs. You gotta have a dog mentality and be willing to get run over by a Mack truck and then backed up over by that Mack truck and try to get up and the Mack truck come hit you again. And then as you're getting out of the hospital 2 weeks later, that same Mack truck comes and hits you again when you're leaving. You got to be willing to stick through that and learn because day trading exposes a lot about who you are as a person. It brings to the forefront a lot of your fears, a lot of your inadequacies, a lot of how you think and deal with money. So you can't just enter the market as a trader. That takes skill. But of course, that's what a lot of the guys on here are trying to learn to do because we know how fast it can help you buy back your freedom and then help you build on your account, your long-term investing account. So getting back to our candles, as investors, if we are looking at the market on a large time frame, and Rock, this is for you. I just switched to a weekly, just so you saw that. And Guys, don't mind all these white lines on here. I do these to plot major points of supply and demand. That's a whole another deeper story. But what I want to show you guys on the screen here is where you can clearly see that back in, y'all see my cursor down here on the bottom left? This was March 11th of 2024. The price of the S&P 500 or the SPY was 508.22. 508.22. And that was last March. The current price is 690.72. So it's up $170 in just a year. And had you bought $10,000 worth of shares of SPY on March 11th, 2024, you guys can do the math on what your profits would be. And somebody could do that real quick. If you had, just say you had 100 shares, purchased at $520 just to make it even, and they grow by $170, then you're multiplying 100 times 170. What's that? $17,000 you would have made by doing nothing. So Brian asked the question, what is my thought on buying partials of a company? If you can't afford a whole share of a stock and you're not ready to buy it yet, is simply how I put it. I think, especially when it comes to dividend plays, if you're buying a stock for dividend purposes so that it's repaying you every month or every 3 months, whatever it is, you want to be able to take advantage of all of that dividend per share. You don't really accumulate a whole lot of value from buying a half of a share and now you get half the dividend. Those are normally just safe havens. So Jesse asked, "What about buying Apple?" As since they don't pay dividends, and yeah, and if you remember, because I do own Apple, simply because Apple is a major leader in a company and how much money they make and bring in and how much cash flow and free cash that they have. So, like I said earlier, you can have a portfolio that only has, if you have 15 companies in your portfolio and you only have 4 of those that pay you dividends, that's fine. Or you can have 8 and then the rest are companies that don't. You just want to make sure that you're buying quality companies on discount. So our job is not to determine who's a quality company. That's all in the data. We just got to figure out how to read it. So once we figure out how to, and you're in the numbers, so you can read numbers well, and you have an advantage in this. So if you were to look up a company's balance sheet, which I'll bring up that example here in a little bit, you can figure out, okay, well, they're increasing in revenue every year. They have a lot of free cash. Everybody knows who Apple is. We see everybody walking around with iPhones. It's probably a pretty good bet, you know? So now we just go to our charts and we figure out what price point is considered a discount. So it wouldn't make sense to purchase right now. But what we all should know is that February is historically a down month in the year, which means that a lot of discounts are going to be available, especially coming out of what's going on in the economy and, retail coming off of, if you're into retail coming off of the Christmas run is going to have a little breather. So you'll be able to get discounts on like retail, consumer staples, and defense, as we know, are running right now. But as soon as they're peace times, you're going to get discounts on defense companies and you're going to get discounts on banks. Tech right now is probably where we're getting our biggest discounts. We've been looking at charts because tech is looking like it could drop. I mean, if we look at Meta, let me switch and go to Meta real quick. Meta is at a discount right now. It's not a very big one, but it's a discount. So, general question. What would you guys consider a good deal on something you're interested in buying? If you were to see it at the store, you're walking by, it's Saturday afternoon, you're with the family, you're window shopping, and you see something that you had your eye on for 3 months, 4 months, 6 months, call it whatever you want, and it is discounted to the point that you're like, ooh la la, I need to get me some of that. How much is that discount? Give me a percentage. That okay, we got 50, we got 60, right? 30, So the spectrum is different. Got 45? Somebody said 45? 25. Okay. So Meta right now is at $620. It recently posted its all-time high at $796.25. Anybody figure out what percentage that is off? If it topped out at 796, just keep it an even number, and it's currently at 620, how much percent is that off? 22? 22%. So Meta right now is not on clearance, but it's on discount. Brian said 35, 30. We heard 45. So you guys see what I'm getting at? We look for great companies, solid companies that are on discount, and then you buy. You don't worry about whether you're buying at the bottom. If you don't think that this is as low as it's going to go, maybe you've done some extra research. Well, then maybe if you have 5-10 grand sitting on the sideline or invested in your account because you've been paying yourself 10% every month for 6 to 8 months, now you have money ready to deploy into the market. Maybe you can afford to buy 6 shares of Meta, right? And it's at 620, but you only buy 3 right now. And then if it drops a little more, then you buy 2. And then it drops a little more, then you buy your last, right? Because we can't ever time when it's going to bottom out. I'm going to be able to figure out if it's bottomed out a lot better than most of you guys just because I'm looking at what the candles are telling me. But that's the point that we have to get to in our understanding of candlestick patterns and why Miss Paulina is going to be better off than most because she's got my book. So 30%, 40% is a really good discount. If you guys recall, in April, right here, what was I screaming to you guys at the top of the mountain when the whole market made this move? I was posting it online. I was telling everybody in the group. Why would I be saying that? Because I'm an investor and I look for quality companies that are on discount all the time. So when the overall market and when things get bad, and you know what? I'll tell you this, and y'all can mark my words on this. The next time you turn on the news or you start really feeling that media push that something terrible is happening in the world, start looking at these charts. And what you're going to see is, am I lying, Rock? So that's when everybody is scared to death is when investors are looking to purchase as much as possible. Because we already know what's happening. And we know that 75% of years, the stock market is doing what? Going up. So, all pullbacks, any major investor that you study, all of them will say, we buy when there's blood in the streets, when it's really scary, when there's a lot of undervalued companies or devalued companies. That's when they're looking to acquire. So when the housing market took a dump and everybody got kicked out of all their houses, who y'all think was in there buying up all those foreclosure homes? It was your investors. It was the whales, the realty companies. Not really realty, but you know what I mean, REITs, real estate investment trusts. It was all the people who had money already. So when things got bad, that just gave them even more opportunities. So now they bought more properties, they bought more stock because stocks were super cheap. And that's how they became millionaires or billionaires 2 years down the road after it all cleaned up and the market got right back strong. So while everybody was scared and a majority of people were selling their positions, or people like my dad were asking questions on whether the market was going to continue to go down or is going to crash and what's going to happen to his retirement, that's when we should be buying. That's how the rich get rich, and that's how they stay rich, right? And what are we buying with it? We're buying assets. That's why we're creating wealth. That's why our wealth continues to grow, because we don't spend it on J's, like V said earlier. We don't spend it on J's when we come up. All your tax fund, everybody that I got in touch with, I know everybody that I speak to at least, when it comes tax time and they get those big tax returns and then just go blow it on a bunch of vacations and all that, that's absolutely money that they could be putting into their investment account and purchasing assets with. So my question is, why don't they do it? It's the same reason people cancel tonight. Same reason that people like comfort and pleasure more than they do. People don't think ahead. People don't plan ahead. There's a lot of reasons. But as true investors, we know when the streets are bloody, that's when it's time for us to make moves. Mm-hmm. Just let it sit in there.
Say, how do
Mm-hmm.
you like with the Fibonacci chart? How do you measure that degrees drop from the 295? I mean the 796 down to the 620.
796 to 6. Oh, so you're saying if I was to draw it like on here? Here,
Yeah,
let me go to a name that I don't have marked up real quick so y'all can see a cleaner chart like that. Um, so and then we'll do this on since we do this practice, Rock. I'll use a live example for us, which will be practical to us, is drawing it as our orb during the day. So we have, come on. No, it don't matter. It's a great day. All right. So you're talking about these numbers here? Is that what you're referring to, Rock?
yeah.
So
Mm-hmm.
the Fibonacci is a mathematical equation. This is not a market thing. This is a life thing. The Fibonacci equation explains a lot of why reality works the way that it works in the physical realm. Okay? So it is a math equation. I don't plot these numbers. These are numbers automatically plotted by the Fibonacci when you draw it from one point to the next. And maybe Spanish or a different language that you don't speak. What I'm saying right now, don't worry about this. This is, you can use this, but this is a little advanced. So, Rock, to answer your question, I'm not drawing these. This is what the fib will draw for you based on points in the line that we draw overall. Does that make sense?
Okay.
So, for those of you new to this, Fibonacci is something that we're using in our day trading to help us establish support and resistance. So, good segue, and I will remove this and we'll go back to our daily. Support and resistance is simply saying where did the price hit its head and fall down, and where did the price get back on its feet and go up. And this thing is tripping. Okay. All right. So get off, bro. Clearly, we can see that we had a long run up right here from this point all the way up here, and it hit its head and fell. Does that make sense? Hit its head and fell. So this is what we would call resistance because it resisted going through that point. And we call this down here support or demand because this is where the price will support it back up. So finding these levels also helps us understand where to purchase and where to sell. Now, again, that's more for day trading because we know in long-term trading that we're really not selling. But it would be good to learn demand to understand where to purchase, good places to purchase. If you can see clearly on a chart that the price of that stock is refusing to go lower than a certain point, like you see here, bottomed out here, didn't get to it here, hit it again right here, bounced right here, and then took off. So the market was clearly telling us that everything below this line right here, the buyers in the market were like, like, nope, we're not taking this for any less than this price. And we're making sure of it by one time, two times, three times, four times, we're going to deny you guys a lower price. And what we're actually going to do is we're going to say that we think that this is too low because it did this. So spotting this, understanding what this is, allows you to take advantage of it. Once you understand the rules of the game, you know how to take advantage. It's when you don't understand the rules of a game where you get absolutely mauled like the freaking 49ers did last night. Hello. Come on. Where my Niner fans at? I hurt somebody's feelings. I don't think we got any Niners fans. Damn, they look bad, bro. They got destroyed. But who was it? All right, let's not get sidetracked. Go ahead. Yep. Green and red. Yep. And I changed mine from red for psychological reasons. Yeah. It was when I first started trading and looking at charts, and I was trying to get comfortable with seeing both ways and not being biased. I had to change that red because for some reason red was like stop. It was like I don't know. It was weird, but that's more of a personal thing. Or if you're like Dub and you have special powers and can see colors differently, then you change it to whatever fits your eye. Hell yeah, you should. Cause
I got one, AJ.
come on.
Hey, can you talk about or tell the new
V, what do you mean by drip method? You threw me off with that.
Well, to activate the drip method to reinvest the dividends instead of receiving the payouts.
Oh, you're saying how to set it up.
Yeah.
Boy, you speaking in code for no reason. So you have to do that on the Schwab. So for you guys that made the contest and you downloaded the Schwab app, you can you go if you go to the page that shows now you have to do this on the computer. You can't do it on your phone. That's the first caveat. If you're going to select your dividends to be reinvested, you have to go to your Charles Schwab on the computer, log in, and click on the ticker that you own, and it will give you the option to reinvest the dividends if it offers one. It's not difficult at all. I guarantee you. So put it like this: you'll have more trouble figuring out how to buy a share of a stock than you will how to set up the reinvestment. But it has to be done on the computer on Schwab. Yes. And actually, if you go to YouTube, drop the link for that video in the chat. Yeah. And Brian is gonna put the link for and this is why I put on the presentations of my YouTube channel and the Discord. So my YouTube channel, I've got like 30 videos on my YouTube channel of pretty much everything you need to know about getting started in the stock market. So that's in there as well, V. I think it's on that one. If not, there's enough information on there for you to figure out how to find it. It's not hard at all.
Oh no, I'm making sure that everybody.
Yeah.
Because I know it was one of the situations that we learned a little bit later in
We did.
our journey.
We did, because I figured out, that's a good point. I figured out that I actually had a few stocks that weren't reinvested. And I found out because a couple months went by and the amount of shares that I owned hadn't changed. And I was like, what the hell? So, yeah. Sometimes it does it automatically, and sometimes you have to go in there and set it up. But
So for the two people who just downloaded the app today, make sure when you start buying assets, that you go in and set up your reinvestment dividends.
and if I can do it on here, real quick, then I will, and I'll show y'all. I just want to make sure I'm not going to be exposing too much. So we are back. Anything else, guys? Candles, how to read them. Companies. I did say that I was going to do that. I'll show you guys a little bit about the financials of a company. So let me stop sharing and share this. Okay, everybody should be able to see my intranet. Holla if you hear me. Let me know when everybody's there. All right. Somebody name a company, any company, but a company that is not mainstream.
What you finna do?
I'm about to look at financials. Or if they're
CZ.
C as in Charlie, Z as in
My bad. It's hold on. Let me get it right.
somebody else give me a ticker. Rick? What the hell is Rick's?
NVTS.
Rick's Cabaret. What do you say? NVT? NV, NVTS. Nancy, Violet, Tom, Sam.
Correct.
Got it. V been doing research on this company, bet money.
Well, this is the same company I mentioned last year, and Nvidia and other companies are partnership with. Great company.
We're lagging a little bit. Give it a second. N- Navitas. Navitas Semiconductor Corporation. $10.91. So we are on Yahoo Finance, one of those five that I mentioned. And we're going to go to the financials tab right there on the left side and click that. You can also get company research, statistics, some historical data. Some of this stuff you have to pay for to see, but everything that we need to be able to see is free. Okay, so total revenue is a key one. And what is this? Simply, this is saying that annually, right? So we're on the annual tab. In 2023, this company made $79 million. Right? Everybody see that? 79 million? 79 million. I got people shaking their head yes, but not asking how 79,000 converts to 79 million. Yeah, it'd be those obvious things. That's like a question I tried to prompt, but I didn't get it. All right, so right here, there you go. You add 3 zeros to every number, all numbers in thousands. So they actually made 79 million, not 79,000. And then the following year, 2024, they made 83 million. So they made, what is that, 16 million more in 2024 than they did 2023. Was that 4 million? Oh, yeah, it is 4 million. I'm tripping. 4 million. And now, of course, we're the beginning of the year. So let's say we wanted to look at that for quarterly, which is every 3 months. Every 3 months. The last 2 quarters, they brought in 14 million, 490. And then was that the last quarter? I think this was the last quarter. And then quarter 4 would be this what we're in now, or just what we're in now. So, or no, yeah, exactly. That actually may be what we're waiting on this next week is some earnings and stuff too. So yeah, it doesn't. I bet it doesn't. Um, okay, so there you can see that, but you can clearly see that from quarter to quarter they were down. Trailing 12 months, gross profit. We can see that their gross profit grew last 2 quarters. Net non-operating. This one is another one that I really like to look at. Net income common stockholders. This is what, let's look at this on the annual. And we want to see this number increasing. This is good. It lost less, so that's good. So things that you want to pay attention to: net income common stockholders. You'll hear this one, and this is a great example, right? Because I know that this question is coming. And this is also why I like Google Finance better. For some reason, Yahoo seems to struggle on their loading. It seems like Yahoo's just going down anyway. What was that ticker again, V? MVTS.
N,
Yeah, N is in Nancy.
Nancy.
NVTS. Okay, so we're gonna get the same information like revenue, but you're like,
Damn, it's more. Yes.
what does revenue mean? It'll give you the definition on Google Finance right there. So just hover your mouse over it. Total amount of income generated by the sale of goods or services related to company's primary operations. This is user interactive. Net income, it gives you the definition. EBITDA. This one is one that you're going to hear on CNBC. They always ask about a company's EBITDA. EBITDA. So now you know what that means. Earnings before interest, taxes, depreciation, and amortization is a measure of a company's overall financial performance and is used as an alternate to net income in some circumstances. So it's a grading, it's a measuring stick that money likes to use to talk about money. My favorite category to look at, and one I often end up looking at first on every company, is cash flow and free cash flow. I will not, I repeat, I will not, unless they have a very strong business plan, I will not buy a company that does not have free cash flow. Because that means it is just like a human being that has no cash in the bank. Anything bad happens, they're in a world of hurt. And I don't want my money invested in a company that is one operation away from being in a world of hurt. Does that make sense? This would be an absolute no. Absolute no for me. Now, and go ahead. You can add. Speaking, if you're gonna. But while he's about to ask this question, y'all remember this and what this number is: 2.73 free cash flow, right? Down negative 325. Now watch Apple. Bada bing, bada bang. They're down, but they have $18.5 billion worth of free money sitting on the side. That's pretty good. You know, they'll be okay.
But now everybody trades on Apple data. So he jumped to it.
Nvidia, free cash flow, 13.56 billion, and it's growing. That's why we love Nvidia. Palantir, just naming a few that I own, and that I know some of the guys in the group own as well. 248 mil. So y'all kind of get it, you know. Revenue up, net income up, net profit margin is a key one. That's up. Earnings per share, that's speaking directly to us as owners. We love to see that up. All good things. Even though the chart looks like absolute poopy right now. Um, as we can see over a 5-year period, look at that chart. Boom, boom. V, what'd you buy your Palantir at? We just talked about this the other day. Didn't you purchase it at like $30-something?
22.59.
There you go. There you go. And that was not even 2 years ago. It was about a year and a half ago. And this is a credit to V, because V is a sniper in research. He likes to do deep dives on companies in his spare time, apparently, when nobody's talking about it, nobody's looking. And then he'll just drop some information in the chat that's super useful. So grateful to V because V allowed me to get. I mean, I didn't get in this till like 60 or $70 uh, involved in that. So V was very early on it, but he's the one that brought it to my attention off of good research. So shout out to my dog. He made me some money. All right, guys. What else we got? We're getting a little long in the tooth here, so we can wrap up. CX. This the one you were talking about? Sure. CamX, SAB. What the hell is this?
Go to the cash flow.
Known as a Mexican multinational building materials company headquartered in San Pedro near Monterrey, Mexico, manufactured. Are you investing in foreign markets, Rock? Is that what you're trying to tell us?
Thinking about it.
I got in. They up. But see, this fits into a consumer staples or like infrastructure sort of thing. So this one I would put right in there with Caterpillar. Everybody knows about Caterpillars, the tractors and all that. Great company. They pay a great dividend. That was my next question, Rock, was dividend. There you go, right there. 0.70% of the actual price. So what is that, 30 cents, if that, 25? Not even. That's 0.7. That's not even 1%. 1%. Yeah, that's low. You're definitely not buying this for the dividend. You're buying this because this is what you would call a speculative buy. Rock is, if he owns this, he's looking to buy this at $12 because he believes that it's going to be 150 in the next 2-3 years. One thing about infrastructure deals and multi-year and big money deals, there's normally government money tied to it, or city or county or state money, because it is infrastructure. So that money is guaranteed and coming on time. So that, hey, and that it becomes a question of, is this a company that you believe in for the next 20, 30 years, or is this a company that you're taking advantage of for what's going on right now? And that is all in the research. Okay, and that's our job as investors, is to figure that answer out. That's a part of what we do. And I was gonna say, Rock is a veteran researcher as well. So we at least if he owns it, I don't know, do you own this? Do you own this?
No.
Okay, you just looking at it.
I started looking at
Yeah.
when I started looking at it at 9, I charted it up and I was waiting for a pullback, but it ain't pulled back yet.
Yeah, this will be tough. It's tough. You'd have to find out just how their business is structured because they're headquartered in Mexico. We would have to figure out if they would see any sort of like tariff stuff, or if that could affect them, or if they only have a contract in the United States for a certain amount of years, all that sort of stuff. But again, what you buy is definitely based on your goals and your objectives, what you're trying to accomplish, because you're not going to buy JEPQ if you're trying to grow a lot of money in a short amount of time. It doesn't move like that, so you have to have certain names. Tech is really where the fastest growth comes from in the market. Tech, maybe healthcare a little bit, and sometimes defense, but tech is definitely the leader when it comes to like prices moving. But what goes up fast comes down just as fast as well. So you also have to be conscious of that in your investments. That's why it's key to diversify. You don't want all your shares in one basket. And I know quite a few people that are probably in the age of 60 to 70 right now that were involved in MCI WorldCom. Who was the oil spill? Was that BP and Epsom, not Epsom, but Epcon, whatever it was? All those big companies that were major in tech and like just crashed, and all the employees lost their pensions and their retirement and stocks portfolios because they weren't diversified. They had all of their investment money into that company and that company only because it was just coming out of their checks, going straight into those companies. The company falls, you lose all your money. And there goes your value. Happened to my dad. And that comes from not understanding how this thing works. When you allow somebody else to be responsible for your money and your future, you are you are a victim to whatever happens based on those decisions. So this is why I think that it's super important that we take advantage of this and we learn how to do this ourselves, because now we know exactly how to operate. We know when to pull the trigger, when not, how to structure it, blase, the list goes on. Cool, cool. All right, y'all. If y'all don't have anything else, we're going to wrap it up, man. Appreciate everybody that came out, man. Appreciate y'all tuning in. Much love, for real. Y'all know how it goes. All right, fellas. Much love, man. Peace, love, profits. Holla at y'all, man. We'll see y'all Tuesday. Be on that live, ready to make some money.